Electronic Arts, otherwise known as EA, their stock is up over 300% in the past 5 years, and they climbed 33% in 2017 and rallied even higher in 2018, at one point climbing over $150 per share. And since then, well, the story is much different. In July, the stock dropped almost 9%, and in August, they dropped another 12%, and their current share price of $112 is down over 25% from the recent high of around $151. So that's not very good. And so the questions that I've been getting a lot is, number one, why is the stock crashing? And number two, is this a good buying opportunity? Both great questions. Let's get started. What's up, everybody? My name is Ale and welcome to my world of stocks. Now, the way we're going to do this is I'm going to start by giving an introduction to the company and what they do. Then we'll take a look at why the stock has dropped. Then we'll take a closer look at the stock, and then finally I'll finish up the video by giving a conclusion and my overall opinion on whether this is a good buying opportunity or if the stock is still looking a bit too risky. Okay, so when looking at the company and their business, EA is basically a video game developer and publisher for home gaming consoles like the Xbox, PlayStation, and the Nintendo Switch, but they also make games for PCs and for mobile phones as well. Now, when looking at their most popular games and IPs, EA publishes The Sims, Madden NFL, FIFA Soccer, Battlefield, Need for Speed, Dragon Age, and Plants vs. Zombies. But a huge thing about EA that not a whole lot of people know is that they have a license with Disney to make Star Wars video games, which is a really big deal because Star Wars is, I believe, the second highest selling media franchise in the world, only after Pokemon. And on top of that, they also have NBA Live, Titanfall, UFC, Mass Effect, and a brand new game coming out early next year that is called Anthem, which does have a lot of hype behind it. And that leads me to one of the biggest pros of Electronic Arts, which is that they have some of the biggest or most lucrative partnerships and licensing deals with some of the strongest brands in the world. Think about it, they have deals with the NFL, FIFA Soccer, UFC, and the NBA, Star Wars. I mean, these are all huge brands that many people care about. And on top of that, the gaming industry is absolutely booming right now. According to Newzoo.com, the gaming market is already worth well over $100 billion and is growing faster than we previously anticipated. And it's well on track to hit $200 billion in the next several years. Not to mention that the mobile games market alone is going to be worth more than $100 billion by 2021. These are some insane numbers. Okay, so everything is looking pretty good so far. So why then has the stock been crashing? Well, let's start by looking at how customers, or let's just say gamers in general, are pushing back against microtransactions and loot boxes. Now, if you don't know what those are, loot boxes or loot crates are heavily scrutinized right now because they resemble gambling. And so what happens is that the consumer or the gamer or customer, whatever you want to call it, they pay real money for randomized items, for basically a loot box that gives you random items. But the reason why they consider it gambling is because you don't know what you're actually getting for the price that you're paying. So that's kind of a form of gambling. And then when looking at microtransactions, that's basically just spending real money for in-game items or virtual currency. Now, a lot of the recent negativity actually started back in November of last year when Electronic Arts released Star Wars Battlefront 2. And this game was hugely anticipated by many fans, but was unfortunately plagued with ridiculous prices that had to be paid with real money in order to progress through the game at a reasonable pace. And despite having the option to earn all of the progression through gameplay, many customers felt that it was unfair because you had to spend hours upon hours grinding through the game just to unlock some of your favorite characters. In fact, some tests showed that unlocking Darth Vader at one point would have taken around 40 hours of gameplay. That is insane. I can't imagine spending 40 hours on a game just to unlock one character. That seems insane to me. And that's if you do not want to spend actual money. Now, this obviously created an enormous uproar in the gaming community as many fans refused to support Electronic Arts and declined to purchase the game altogether, which led to EA selling way less copies than originally anticipated, and it hurt investor confidence in the company. In fact, in the first quarter of that video game's release, unit sales came in over 1 million copies lower than expected. Eventually, the game was mostly fixed by removing loot crates altogether, but that also drastically cut any potential of revenue from loot crates, and even now the game sells for a very low price at most retailers. But even more recently, the controversy plaguing Electronic Arts really has to do with their newest Battlefield game that is coming out at the end of this year. And the problem is that gamers were pretty angry at the game because it was supposed to be a representation of World War II, but the game had a robotic armed female character fighting on the front lines. Now, this topic is very divisive, so don't get mad at me. I'm just the messenger. I'm just telling you guys exactly what happened. But basically, a lot of gamers felt that this wasn't an accurate representation of World War II, which made them very upset. But to make matters a lot worse, it's actually the response from EA that really ignited a lot of this. And to be more specific, it's the response of their chief creative officer at EA, who responded by saying things like, "These people are people who are uneducated. Today, gaming is gender diverse. We stand up for the cause because I think those people who don't understand it, well, you have two choices. Either accept it or don't buy the game." And the result? Well, people stopped buying the game. According to Cohen, pre-orders for Battlefield 5 were 85% lower than their rival Call of Duty. And if that wasn't bad enough, that same chief creative officer ended up leaving Electronic Arts about a month later, which sent the stock down even more. So that's a pretty nice present to give shareholders, right? Send the stock down and then leave the company. I mean, it's just amazing. But another problem with the game is that reports were coming out that the game's performance was not very good and it was a little buggy. And then Electronic Arts came out of nowhere and delayed the release of the game by a whole month from October to November. And the reason why that's a big deal is because they have heavy competition from Activision and Take-Two, both of which releasing Call of Duty and Red Dead Redemption 2 in October. So now their competition is actually releasing their games earlier than Electronic Arts. And because of this delay, EA had to actually lower their guidance for the fiscal year by a few $1 million. Now, in the long run, this probably doesn't matter too much as long as Battlefield does actually sell well, but the fact that their competitors are releasing earlier than EA, this could actually raise some concerns. Okay, so that leads us to their stock and their valuation. Now, again, this is a stock that is up over 300% in the last 5 years, but has recently dropped by over 25%, erasing most of their year-to-date gains and bringing their share price down to around $112. Okay, now they don't currently pay a dividend, and despite the drop in their share price, I think a lot of value investors would still consider this stock to be quite a bit overvalued. Now, according to simplywallstreet.com, their current share price is significantly higher than their future cash flow value. Their PE ratio is fairly high at over 50 versus the market at 20, but we'll talk about PE ratios a little more in just a second. Their PEG ratio, which factors in future growth, is very high at over 4, and their expected earnings growth is lower than both the industry and the broader market by a significant margin, but it is at least in the double digits at around 12%. And when looking at their asset value, their PB ratio is also higher than the industry and the market at around 6.5. But taking a look at their income statement and their balance sheet for the last 4 years, we can see that things are looking pretty good, but nothing like really amazing, but pretty solid, I guess, overall. Net income has been up and down a little, but they're still very profitable by over $1 billion. Their current ratio is almost a 3-to-1 with plenty of cash, so that looks good. And then their profit margin is also really solid at 20%. I think the S&P is at around 11%, so that does bode very well for EA. So overall, I think that their stock is nothing amazing. It is maybe a little overvalued, but their finances do look fairly solid overall. So I think the real question is, do they have enough branding and IPs to bring back some hype into the stock? Well, let's talk about that in my conclusion. Okay, so here's the thing. There's a lot of negativity right now surrounding Battlefield, and the reason why is because there were very high hopes for this game. This is the first time that the Battlefield franchise is bringing in a Battle Royale mode, very similar to Fortnite. By the way, Fortnite has already brought in over $1 billion in its first year on the market. So you can see why analysts and investors would be very hyped up and very much looking forward to this new Battlefield game mode. But the problem is that a lot of those hopes are really being crushed by EA because they've pissed off their fans. Their rival Call of Duty is also doing a Battle Royale mode called Blackout, and it's already receiving a lot of praise. And because that game launches earlier in October, that does actually give Activision an opportunity to convert some gamers over from Battlefield to Call of Duty. Not to mention that this is already one of the most crowded holiday seasons in terms of video games that I think I've ever seen in my life. I mean, there's so many games. Not to mention, how many times do we talk about Nintendo on this channel? We've got big games coming out for Nintendo. We've got big third-party games coming out for, you know, like Xbox and PlayStation and things like that. I mean, this holiday season is honestly stacked. But on the other hand of all this, EA is one of the biggest gaming companies out there, and they have some of the biggest partnerships to go right along with it. Not to mention the fact that the mobile gaming market is also taking off, and while EA is actually struggling there, in their last quarter, their mobile segment was actually down 2% year over year. We know that they have a pretty strong balance sheet with plenty of resources, plenty of cash to actually reinvest into that segment and help grow it out in the future. On top of that, EA does have a pretty high PE ratio. I mentioned that we would talk about PE ratios again, and it's currently at around 50. But if you look at their competition, Activision, which by the way, I own Activision stock. I should have mentioned this before. I don't own EA stock. I do not own Take-Two stock. I used to own Take-Two stock, but I do not own it anymore. And but I do own Activision stock, and Activision's PE ratio, you're gonna call me insane, but their PE ratio is 122. So EA's is pretty high at 50, but it's less than half of Activision's. And then you look at Take-Two's PE ratio, and that is at around 80. So EA is actually lower than that one as well. So when comparing it to its competitors, its peers, EA's share price is maybe not that bad. But yet another concern is that Belgium is actually banning loot crates, and while Belgium may not be a very significant market for EA, it can certainly lead to other countries banning loot crates as well, and that would not bode well for EA's revenues from games like FIFA and Madden, where microtransactions and loot boxes are a huge deal. So in the long term, I think that this is a great gaming company in a booming gaming market with some of the biggest and strongest licensing deals around. But in the short term, there are a lot of concerns going on right now. And despite the recent drop in price, the stock still doesn't seem, or at least it doesn't feel all that safe. Now, I wouldn't be surprised if the stock rebounded and just kind of started climbing again. But I also wouldn't be surprised if Battlefield comes out and it doesn't sell that great and the stock continues to fall down even further. So personally, I kind of like Activision and Take-Two a little bit more. Now, if you ask me to give you all the reasons why, I'd have to make videos on those. I can't just, the video would just be too long if I went into all the reasons. But I do think that this Call of Duty game for Activision is going to sell very well. I think that this Battle Royale mode is going to take off, called Blackout for Activision. And then when looking at Take-Two, you got to figure that that other Grand Theft Auto game has got to be coming at some point. And man, I think the previous one is like one of the best-selling games of all time. So they're just sitting on a gold mine there with Grand Theft Auto. Not to mention that if you try to play online, by the way, let me know in the comment section if you guys have ever tried to play Grand Theft Auto online. It is insane how much money you have to spend in that game mode online. I feel like you just can't do anything in that game mode without spending money. I actually cheated once. I probably shouldn't be saying this because this is out there in the public, but I actually cheated once and I was able to get some like fake money in the game, and that actually made it a little playable for a little while until I had to actually start spending money. And I don't like spending money in video games, so I had to just kind of stop playing it. But that's the only concern I have with Grand Theft Auto, is I think they take advantage of the gamers, and I'm wondering if they do that with Red Dead Redemption, at what point are gamers going to say no to that and maybe not purchase Red Dead Redemption if they see how crazy it is? Because you got to figure, when they saw that with Star Wars Battlefront 2, they stopped buying the game and the game crashed. So who knows, maybe something like that happens with Red Dead. The difference with Red Dead though is that they do have a pretty good single player, at least they're supposed to have one. But anyway, so if I was going to buy EA stock honestly, I think one of two things would have to happen. One would be if the stock drops a lot lower to the point where it's discounted at a very low price to where it's just too attractive and I just can't say no to it, because in the long run I think EA is a pretty good company just because they have so many good partnerships and things like that. And then the second thing that I think would have to happen is that if literally any good news comes out for Battlefield, because right now Battlefield is down there. So if any good news comes out, you got to figure that investors are going to jump on it and drive the stock price back up. So I think one of those two things happens, I'm probably buying EA stock. But if neither one of those two things happen, then I'm not buying EA stock. Right now I'm not buying it. I'm kind of waiting to see if one of those two things happens. So anyway, who cares what I think? It really matters what you guys think. Let me know down in the comment section below. If you enjoyed this video, if you appreciate the videos that I put out for you guys, please support the channel. Anytime you hit the like button, it always helps me out a lot. Lately you guys have been doing it a lot and it's been helping the channel a lot. And now I've said a lot too many times, so I'm going to end the video. Have a wonderful, beautiful day and take care. Bye-bye.